to discuss the road ahead for the market as well as some of their top investment bets. Joining us on the show right now is Shailendra Kumar, who is a director and CIO joining us now. Well, Mr. Shailendra, pardon me, he's joining us from Narnolia Financial Advisors Limited. Good afternoon to you, and thanks a lot for joining us today on BloombergQuint. First up, just want to get your word with regard to earnings, which have almost kicked off today in the form of South Indian Bank. Which are the sectors where you're expecting some sort of outperformance to come about this time?
Okay, Lo. So, in terms of our earning expectation, we have our view of about 9% earning growth for FY18 and 13% for FY19 and then 15% compounded thereafter. That's one. In terms of outperformance, some of the sector where we think the number will be quite good will be one, retail. We assume something like 25% sales growth there in most of the companies. Insurance will be another sector where you will find good amount of earning growth happening. Private banks, see South Indian Bank, the result that came today, you have a large one-off like provision. Otherwise, if you look at the other numbers, they were not so bad. So maybe this fall is like little extra than what it is warranted.
Actually, but you said you are looking for 9% EPS growth over the current financial year. Now, one quarter has already gone by. What's your assumption for the current quarter and the remaining two?
See, current should be about 6-7% somewhere in between. The other should be about 13-14%. So that's like the base assumption.
So you mean to say this is probably going to be the worst quarter in a trend, and here on you see a pickup. What is the reason behind this assumption?
No, I think yeah. Right. So Q1, I suppose, was the worst. I think Q2 will find at least the management commentary becoming much better than what it was in Q1. So that side, basically the expectation for Q4, Q3 and Q4 will start getting built in after the result, because the commentary, unlike the Q1, will be much better this time, I suppose.
And well, one of your report also highlights that you're bullish on spaces like insurance, capital markets, as well as retail space. Could you highlight some stocks from this sector where you are still constructive?
Sure. So before coming to the stocks, I'll give you the reason why we are so bullish about these three sectors, which is like insurance, capital market and retail. So look at internationally, like, so in S&P BSE 500, that is Indian index, the representation for retail is about like what, 0.2%. The capital market is about 0.9% and insurance is about 0.5%. Look at US, where these numbers are like 7% for retail, 3% for capital market and 3% for insurance. Even China Shanghai Composite Index, if you look at, the retail is about 2% and capital market and insurance are about 4.5%. Now, apart from the international comparative, if you look at what has happened in the last 1 year, look at retail, for example. With the demand and now this GST, if there is one industry or sector which is clearly a positive, for which the thing has been very positive, is retail, right? So we assume these demand and GST happening will make these three industry, so financial savings are improving. So capital market and insurance are part of that. So all these three industries are now getting local or domestic macro positive as well, which will help these industries become a predominant force as far as Indian browsers are concerned.
Okay, so that is the reason behind your liking for this sector. Now, you have chosen ICICI Pru in insurance. Any particular reason for preferring this stock?
Fine. So like you don't have too many insurance stock right now listed, so they are lined up, of course. Now we like ICICI Pru because of a couple of reasons. So first about the insurance per se. So in India right now you have, in terms of total premium collection globally for insurance, we have just 2% pie in that, right? Penetration is pretty low. Number one. Number two, there will be both the insurance penetration going forward for next 5-10 years, as well as there will be a kind of value migration from existing public insurer to these private insurer. Look at LIC, for example. So new business premium for LIC between 12 and 17 has fallen from 64% market share to about less than 50% market share. In between, the market share for, say, ICICI Pru has gone up from 6% to 13%. If you look at last year, their premium, annualized premium equivalent has gone up by almost 27%. If you look at in terms of new business volume for last, say, 2-3 years, it had been upward of 30-35%. Now, there are some concern at times about these companies having little higher valuation. So, like for example, ICICI Pru, the embedded value, so EV to embedded value will be about 3.7, 3.75. But look at the embedded value is giving you only the future value of the current policies that they have sold. But when we are talking about large amount of business expansion for the insurance sector per se, and then if you figure those out, these valuations are not that costly and creates a very good investment thesis.
Well, and from the capital market space, you like BSE, which is Bombay Stock Exchange. Well, the stock, you've mentioned that it is trading at a price to book of almost 1.7 times compared to 4.7, almost 5 times, where the global exchanges trade. Well, if you look at BSE, their market share in the F&O space is almost negligible. Where do you think the growth will come for this exchange?
Okay, fine. So, BSE is a proxy for what? The financial saving that is increasing in India. BSE is a proxy for to capitalize on that particular trend, right? Number one. Number two, if you look at the formalization of economy which is happening right now in India, we are talking about. So, SME listing space, which is a large driver, which is going to be a large driver for BSE revenue going forward, is another interesting, which adds the attractiveness of BSE as a stock. So, both mutual fund platforms that the BSE has come out with, as well as the SME platforms. So those are going to be a large value driver. Now, coming to the valuation that you spoke about, see, the valuation of BSE had been little, in terms of price to book 1.5, 1.6 and 1.7, for example. Now, why? Because the ROE has fallen for BSE over the last 3-4 years, primarily on account of EBITDA falling, right? And EBITDA fell primarily because of two things. BSE was indulging into a lot of liquidity enhancement scheme in 2013, 14, 15 period. And also, it had to pay almost 25% of its profit to SEBI in terms of settlement guarantee fund, which is now over. So, if you look at the last quarter or last 2 quarters, you can see the profit margin of NSE is improving, which in turn, say in a year time, will make the ROE improve. So, that will be the region for a valuation re-rating for BSE. Also, you have a very attractive dividend yield in BSE.
Okay, Mr. Kumar, we'll discuss some more investment ideas with you in a while. But Yash Upadhyay is joining us now with the Fab 4 stocks of the day. Yash?
Good afternoon, Pradeep. So, shares of SH Kelkar & Company gained as much as 8% intraday after Edelweiss Investment initiated coverage on the stock with a buy rating and a target price of Rs 348, indicating an upside potential of almost 30%. Lubin is another stock which is buzzing in trade today. The stock is up about 1.5%. This comes after the company received the US FDA approval for its generic hypertension drug. Now, mind you, the stock is up for an 8th consecutive trading session. Shares of Adani Transmission are locked in a 10% upper circuit, hitting an all-time high of Rs 193.35 in the process after the company said that it has entered in an exclusivity period with Reliance Infra for acquiring its Mumbai operations. And lastly, we have NCC. The stock is up about 3.5% after Cogensis reported that the company has bagged an order worth Rs 2,000 crores from NBCC for a World Trade Center project in New Delhi.
All right, Yash, thanks a lot for bringing those Fab 4 stocks of the day. Let's go back to Mr. Kumar and chat with him about his top picks. And you also like Trent, which you've highlighted in your report because of shifting of market share from unorganized to organized. A player like Trent will benefit because of GST implementation and also because of demonetization. Just want to check why only Trent, because we've seen earnings potential improving for the likes of Titan and as well as PCJ because of the same reason as demon and GST.
Yeah. So what you said about Trent right now. So so true. The demon and the GST is a very big positive for Trent. And I don't say Titan and PSEJ is not an attractive proposition right now. We have highlighted in the report Trent primarily. So like Trent has 4 businesses. So one is West Side, then you have Landmark, then you have a 50-50 JV with Tesco, that is the Star Bazaar, and you have a 49 to 50% JV with Jara. Now look at these businesses. And also in terms of, look at the balance sheet for Trent, for example. It has the cleanest balance sheet in the whole space of retail, I would say. It has maximum amount of maximum private level that they sell. So their margin profile remains very stable. Look at the management. Now, management has figured out both write a strategy for a star, I suppose, and also landmark where the music business was not doing so well because of technological changes. They've reduced the number of stores. So now added some toys and sports to get landmark also a bit positive. The kind of store expansion they have right now, they're talking about. So, for example, for West Side, the stores will be growing up by, say, 50% in next 2.5 years. For Star Bazaar, they are now very aggressively opening in a small size stores. Jara, of course, they will not be growing very rapid from here on in terms of number of stores, but I suppose a good amount of same store sales potential exists in Jara business as well. If you look at all the businesses, you have a company where you will get a 25% plus sales growth over, say, foreseeable 3 to 5 years with a very stable margin profile. That surely will make your return from Jara, from Trent Limited per se, much higher than the aggregate market.
Okay. Mr. Kumar, you like certain niche stories, as it looks like, the stocks you have picked up. You also like Quest Corp. What kind of upside or potential do you really see here?
Okay, so Quest Corp, if you look at this industry of business services, so Quest is into business services, which means like they are into staffing services, they are into facility management, they are into maintenance services like that, industrial assets as well. And this is a niche business, of course. But look at the kind of growth they have done in the last 5 years. So they have grown 60% plus every year for last 5 years consistently. If you take a global comparative, say Serco in Europe. So between 1990 and 2000, when this business services industry was flourishing there, Serco had a 25% plus sales CAGR over 1990 to 2000. In turn, the market capitalization moved at a CAGR of about 44% in that 10-year period. For Quest, look at in India, I suppose this business of business services had just started as such. So the next, and management pedigree is very strong. They have managed a very excellent balance sheet. They are also confident about 50% plus growth in the foreseeable future, 20% from the already existing businesses and 30% from acquisition. So if you look at all the bits and pieces of this industry, new industry coming up, you have excellent growth going forward.
All right, Mr. Shailendra, we leave it at that note. Thanks a lot for joining us today on BloombergQuint and taking us through your top picks.